Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. I'm zoomed in here right from last week's forecast line. You see I left this diagonal line in place, saying that the end of that line would be the target that I was carrying over to the following week. That low was 347.38, and you can see that on Tuesday we hit that target to the penny and then we bounced. Now, today you can see that we gapped up on what was described as a blowout jobs market report. And before I get too far into the analysis of the other markets, I want to bring something to everyone's attention. While the numbers can easily be manipulated with unemployment and new jobs created, the true number, the real number that affects our economy is the labor participation rate. And this is a chart that's taken from the U.S. Bureau of Labor Statistics, and you can see that right at the top of this high right here, that was pre-pandemic 2020, and we are far away from getting back up to those pre-pandemic numbers. Now you can see that we were starting to have a beautiful recovery here, a nice rounding bottom, and then boom, the pandemic and the COVID hit, and we have not yet recovered to that pre-pandemic level. What that translates to be in reality, being that we have about 331 million Americans in the U.S. right now, at least reported that is, that works out to be about 38.3% of our population is not in the labor force. It works out to be 125 to 126 million Americans are not participating in our GDP. Now, let that sink in a little bit as we go back to the charts, because if you think we're going right back into a booming economy with these other COVID variants starting to pop up, Delta, and even the CDC is reporting a Gamma variant, then you have to be very, very careful of any long positions. So today's gap up on that jobs report, I think, has got a lot of air left out of it, because you have this volume is still decreasing even though that's a new high. So what does that mean? Well, I'm going to erase this, and I'm going to erase the previous forecast line now that that target was hit, and I'm leaving this line down here as a key support level. As we approach the middle to end of August, I am forecasting that we're going to go right back down to that level. And when I look at the other markets, you'll see from my Fibonacci numbers, you'll see that these numbers are very close to Fibonacci pullback points. So for next week, Monday, Tuesday, and Wednesday, I think we could easily pull back to this moving average. Right there, that support level at the moving average would be around 349.29. And so that's the forecast for the diamonds. As I go to the Qs, ticker symbol QQQ, you'll see that I've left my horizontal line in place. Going to switch this to the Fibonacci retracements because I want to show you something. A Fibonacci retracement calculator basically takes the Fibonacci sequence and breaks it into pullback points. I'm not going to get into the details of how that works. I would encourage each and every one of you who are interested in technical analysis to study the Fibonacci golden ratio, and you'll see how accurate these numbers are. Now, if I go back to this low right here, and I start my Fibonacci line, and I drag it right up to the top here, you'll see that my pullback point, hard to see now, isn't it? My pullback point right there, which is the line that I had prior to drawing the Fibonacci's, is right exactly at the 38.2 Fibonacci pullback point. So I'm being conservative in that as a target, because a lot of times we pull back to the 50% level in Fibonacci, and you could use this calculator on any stock to see how well those numbers hit. And so I'm keeping that line intact just like that, and I'm not moving it until we actually hit that. Now, on the downside, keep an eye on the CCI down here. Notice how it's starting to hinge lower, and that is also showing a negative divergence from price. Again, we have a higher high on the price, but what's happening? Both the stochastics and the CCI are showing lower highs here, with today, even though we had a slight downturn in the Qs today, we have a hinge lower on that CCI. And as I magnify that, you'll see it cross right back down below the red line, which is the plus 100 mark, generating a sell signal. So again, I'm keeping this line right here, this horizontal line, is my price target. I would suggest you trail your stops. If you're an option trader, you can position yourself with put spreads or protective puts, or if you're long stocks, you could do covered calls, you could do collars to protect your downside using the market's money to pay for that insurance. There's lots of things you can do rather than just biting your nails waiting for the market to pull back. And again, for those of you who are looking to take new long positions at the high, I would suggest you use the 1% rule for managing risk to make sure that you're not overdoing it in those long positions. So that's the Qs. If I take a look at SPY, this is the S&P 500 ETF. You can see that weeks ago we hit this downside target. I am keeping this target in place. Again, using the Fibonacci retracements as a guide. Watch what happens when I go to this very low right there. I'm going to go to that low pivot point and drop it off right at the high right here. And you'll notice that this 23.6% pullback point is very close to my forecast right here, around 410.77. That, again, I'm leaving that in place for a longer-term price target. I might leave these Fibonacci lines in place until next week. Then again, I might clean it up and just leave my forecast line, but that is for the S&P. If we take a look at the VIX, notice what happens. We could use the Fibonacci retracements on the way down as well. Watch, I'll take this high right here, this very high, click my Fibonacci calculator, go all the way down to the very low right there. And what do you have right there? Look at that. The 61.8% pullback is my resistance point right there at 28.43 for the VIX, keeping my forecast, my long-term forecast for the VIX up there at 27.31. So again, explore this tool. If you're using Thinkorswim, it's in there. I do know that E-Trade, Schwab, Fidelity, they have the Fibonacci retracement calculators in there. You can use Fibonacci fans, Fibonacci timelines. There's a lot of things you could use the Fibonacci sequence for. I use it as a tool for establishing pullback points or target prices using the Fibonacci retracement. So that is the VIX. Again, nothing's changed on that forecast. Going to IWM, right here, Russell 2000, keeping this longer-term forecast in line. And for our option traders especially, they all know that a close below 210 is going to mean a complete shift in this sideways channel formation right here. And today, what do we have? We have a spinning top right there in an overbought condition on the CCI at a resistance point right there. See that? Now, if I go back and use a weekly chart on IWM, I can just pull that back and use a weekly chart. If I go and see where this line lines up, my forecast there with the ultimate low from back here in April last year, you can see I'll start my Fibonacci line right there. I'll bring it right to any of these tops here or here. It doesn't really matter. I'm going to go right here. And look at that, dropping that line. My forecast for that Fibonacci matches up perfectly at 38.2 or 182.41. Our option traders have diagonal put spreads in place, ready for that pullback when it finally occurs. And if I zoom in a little bit more, you'll see this is looking very much like an M-top formation right there. There's your M-top. Again, look that up, and you'll see that M-tops or double tops are very reliable, but the trigger point comes when the price breaks out from the bottom or the base of that M. And if you're looking at just as a straight channel type of a formation, you would take the width of the channel, which is from this lower support level to this resistance. You take the width of the channel right there, and you attach that to the breakout point down there, and that too will bring you right to my target. So if that upside or sideways trading channel does break, you could expect any downside pressure to come in almost immediately, and then we'll establish a new trading range as we move to the lower levels. So that's it for this week. You have a great weekend, option traders. Next weekend, a week from this Saturday, I'm going to be working on the expiration week alert to let everyone know how to roll their positions, take in the cash. It's a big week for us, and taking in cash credits. It's a very exciting time of the month, and I'm looking forward to that. So if you have an interest in trading with us, just click on the link in the description box below, and you will be directed to someone who can help you learn more about our trading services. So please like, share, and comment. We love your comments. Thank you so much. You're contributing to the body here of members, and it really helps quite a bit with helping others answer their questions. So thank you very much. We'll talk to you soon. So long.